American Express reporting mixed second quarter results this morning. For more on the numbers, we want to bring in Erika Najarian, who is head of U.S. Banks and Consumer Finance Equity Research at UBS. Erika, American Express beating on the bottom line, but you can see the stock is off by about 1.5%. What happened here? What do investors see that they don't like?
Yeah, so the net revenue, including expenses, actually missed the street by 2%. And what I think they don't like is, look, American Express is the JP Morgan of cards. So every time it reports, I think the investors have a pretty high bar. But what you're seeing is even American Express's high-end consumer is also slowing. If you look at U.S. consumer spend, it did slow to, 7% from 8% last quarter. And we also saw that spending in travel and entertainment has moderated and goods and services pretty flat. So while we have been talking about a slowdown in the lower end consumer, it's a sign that the slowdown is also spreading upward.
Yeah, I spoke with the CFO, Christoph Lakayak, who said that it is a slow growth environment, but he said our credit metrics are very good. He said the spend levels, he wishes they were higher. But when you look at the credit of those affected, if there is a downturn in the economy, what do you think will happen? Because they've added a lot of new card members.
So I actually think that's up for debate. Look, I think at the end of the day, on a relative basis, American Express is going to be pristine relative to peers. That being said, I actually like the intonation in your question in that there are a lot of, new card members and card holders since 2021. And, Gen Z and millennials are now a third of the spend at American Express. And so, as somebody that's been covering banks for 20 years, I sort of see that as untested through a downturn. And while American Express will be better relative to peers, I think you're right. If we do get a downturn in the economy, I think there's going to be question marks in terms of what comes in the heels of that growth.
So how do you compare them to other banks, to other card companies?
Sure. So I think that, we saw other issuers, show spend that was really, really moderating. So, the lower income and middle income consumer, they have, more frequent transactions, smaller basket sizes. They're really trying to get the value for the dollar. And again, we're not seeing quite that kind of slowdown in value seeking from the American Express cardholder. And we are seeing, delinquencies stabilize at other issuers. So overall, the U.S. consumer is still relatively healthy. I think what investors are trying to think about is that rate of change that perhaps the American consumer is actually now starting to cumulatively feel the effects of inflation.